discussion going with Sandip Sabharwal, who joins us on the show right now on the fundamentals. Sandeep, hi. Good to be speaking with you. Good morning. It doesn't look like it's going to be a great morning for the bulls with the kind of setup that we have at our hands. But I wanted to specifically speak with you about the defense pack. HAL is in for perhaps a good opening today, given the fact it's bagged a large order. What's the take on the defense pack? Do you think that there is more upside to some of these names or well priced in?
Yeah, so I think it varies now. So initially, 2023-24, we had a up move across the board in defense stocks. Now I think companies are getting separated based on their outlook. So HAL obviously was expected to get this order. So I think once the order actually comes through, that's the time I think the positivity builds in. So HAL is reasonably placed. I think it's a stock which can do a 15% CAGR kind of thing over the next few years. And the defense fact, Bharat Electronics also is well placed. Some private companies could be better, also well placed, but most of them are richly valued. So overall, the defense story is still pretty strong in India. You just need to pick out your entry points.
Let's shift focus to Zomato then, because that's the counter that's going to be in focus today, as we are aware that the company has received a tax demand of over 800 crores. But on the flip side, there's a positive news flow as well, because Zomato's quick commerce arm, that is Blinkit, has launched Bistro. That's a new food delivery app, and this is the second attempt that Zomato, or rather Blinkit, is coming out with. So Sandeep, wanted your take on Zomato, because definitely the investors are happy, the stock is doing pretty well. But given that 800 crore, more than 800 crore worth of tax demand, could this be a dampener? Or given the weakness, would you be a buyer at lower levels?
Usually all these tax demands and all have a muted impact on stock prices, because in a large part these get stayed by the higher authorities, and eventually the resolution of this entire thing takes few years. So there could be some negative impact in near term as some traders sell out the stock because it's an FNO now. But I think the longer term impact will actually depend on how the final resolution happens. Overall, the stock's done very well this year. A large part of positives seem to be in the price. One thing we also need to consider is that the quick commerce business is seeing much more increased competitiveness and new players coming. On the food delivery side, still they are much better placed, but on the quick commerce side, I think the competitive intensity is only increasing. So becoming profitable there could get delayed much more than what the analysts are expecting. So I think that's something we need to monitor. So I would think that stock's fairly valued. I don't think it offers much upside from current levels in the near term.
Not be a big, upside from the current levels, because profitability might stay a bit lagged, given the fact that the companies are making a lot of investments into managing competition at this point of time. But Chandan Taparia also joins us on the show right now. Chandan, hi, morning. Just wanted to begin by discussing IOC with you, because Jefferies today has upgraded that stock to a buy. The target price is 185 and they're calling the risk reward favorable. Would you concur with the view on the charts as well?
Good morning. Thanks for having me. Looking at IOC, the entire sector witnessed some profit booking from higher levels. We have noticed that in the last month, we have seen a corrective move from 180 to 140. However, it formed a base near 130, but we need to understand whether the follow-up buying is happening or not. So as of now, it got stuck in a range with multiple support at 138 marks. If 130 is respected, then some recovery could be there. But according to chart setup, I believe that above 145 only short covering trigger could be there in the counter. So need to keep in mind that 130, 738 could act as a support, and above 145, it can witness a recovery towards 150 zone. So likely to be a very conditional trade given the market scenario.
Okay, fair enough. Meantime, let's get in a sense, Sandeep, from you as to what the outlook is on the auto space. For example, Tata Motors talking about how a majority of their EV sales as well coming from tier 2 and 3 towns. So it clearly means that the consumption trend is picking up across the board. In light of this, what's your view on auto and the EV trajectory? Sandeep, you'll have to unmute yourself. Okay, I think we're having a bit of an issue with that audio. But nonetheless, in the meantime, Naresh, why don't we get a chart check going on Tata Motors and anything else that stands out on the auto charts?
So on the auto names, majority of them taking a correction, slow and steady down move. The only one which has been showing relative strength is Eicher Motors, which has been sideways totally for the last 6-8 months. Around that 4,700, 4,800 mark, goes to 45,000 odd levels, comes back to 4,500. So that's the one which is not corrected. And the other one is Mahindra and Mahindra, that continues to be the leader, does not correct much with the markets, ends up making new all-time highs. Now also the stock is 3-4% away from an all-time high. So on dips, these are the two names which still show a lot of strength. Tata Motors tried to make a comeback move 3-4 days back, but fizzled off, did not bounce back sharply, so continues to be in a drift lower. So that's the case with all the auto names, whether you pick up a Bajaj Auto or a Hero MotoCorp or even a Maruti, so across two-wheelers and four-wheelers. The only place relative strength is Eicher Motors, and mind you, Eicher Motors was not the best performer in the previous year where everything went up. So that name still looks interesting in Mahindra and Mahindra on a sharper decline.
All right, so those are the outlook coming in on some of these auto names. But Naresh, if I can have your take specifically on Ashok Leyland, because that's counter is going to be in focus on the back of a new order win, more than 350 crores. So any take on Ashok Leyland specifically? Because what I see is that the stock is seen to be taking some support of its moving averages.
So the stock has earlier corrected from 265 all the way down to 205, has made a slow and steady comeback over the last 2 months. For now, it's been in a very tight range wherein, say, closer to 236, 238 is a price point where it gives a flat breakout. If it does so, then we could be looking at a move back to 250, 55 levels. So for now, it is a consolidation, need to wait for price action. Last 10, 20 sessions, it's been in the range of roughly 225 to 235. So if it breaks about 236, then maybe it could be a positive tick.
Okay, watching out for whether that breakout happens or not. But Sandeep is back with us. Sandeep, wanted your take regarding some of these infrastructure companies, the EPC players, IRB, HG Infra, GR Infra, Shoka Bilkans of the world. Would you be a buyer in any of the names?
Yeah, on the construction infrastructure side, we need to distinguish. So I think many of the companies which are purely focused on the road side, so I think that's where the issue has been, because the order flows have got restricted and the execution also has been not at the pace at which what it was expected. So I think that's where the concerns lie. X of that, most of the other construction infra companies which are focused on buildings and material, buildings, urban infrastructure projects, etc., they are doing well. So, and there was a slowdown related to the elections, etc., but order books are strong and execution cycle should be strong over the next 1 or 2 years. So I think we need to be selective out there.
Need to be a bit selective when it comes to these construction companies at that. But I think time to get very, very selective when it comes to the financials as well, right, Sandeep? Because this morning I was going through the note coming in from UBS, which is talking about how the NPA risks continue to be on the higher side. In fact, for CV and business loans as well, there is that increased risk coming in. That's why IndusInd Bank, they have cut the target price to 1150. The Axis Bank target price has been cut to 1210. Even for AU Small Finance Bank, the target price has been cut. It's only HDFC and ICICI which they say are better poised in this kind of scenario. Would you concur that it's just HDFC and ICICI Bank that you need to stick with, and the rest, the AUs and the RBLs and the IndusInd of the world, is something that it's time to stay away from?
In financials, obviously, risk is the most important parameter, and that determines the valuations of companies. So I would not say that you should completely agree with what analysts say at a time of the cycle when the monetary easing cycle could actually be starting off, and end of cycle sort of you come out and become negative on particular set of companies. I don't think that's how investing needs to be done. However, I think many of the smaller banks have an excessively high risk profile. They got very highly valued earlier in the expansionary cycle, And because they were growing so rapidly, obviously they get hit much more on the NPA side. But I think most of the other large banks, be it ICICI, Axis, or for that matter, HDFC Bank, I think they are reasonably well placed, and possibly SBI also could be reasonably well placed. So I don't think there will always be a small NPA cycle after a very clean cycle, sort of where the NPA accretion was not there. In fact, there were recoveries. But that's part and parcel of the banking business. What we need to compare is, as far as comparison from the previous cycles, the NPA accretion is much lower. So I think the risk management, the regulatory environment in which these companies, banks are operating, and their experiences from the last cycle have made them much stronger. And I think that will help sustain valuations.
Meantime, just pull up the charts of some of these interesting movers. The last 1 month chart, these are the stocks that have managed to gain. There's actually Swan Energy, which tops the list, close to a 40% plus gain that it's seen in the last 1 month. There's been HEG as well, that's had a decent run up. These are on the Nifty 500. You've got a CDSL, which has gained something like a Maharashtra Seamless as well, has gained about 28% or so in the last month. And then there's PB Fintech that has stood out. Wondering, Naresh, among the names that are flagged off, is there anything interesting that you like on the charts?
So a lot of these names have really done well. PB Fintech continues to be in a strong uptrend. So that's the one. And post the FNO entry also, the stock has seen a lot of momentum. So that's a stock which should be on radar once we see a little bit of a pullback. The stock coming back to 1950 to 2000 would be an entry point. So all these names have done well. So what would be looking out for PB Fintech, which has been in a strong uptrend? A little bit of a correction would be a buying opportunity.
Right, so all eyes on PB Fintech. A little bit of correction could be a buying opportunity for this one. But Chandan, I wanted to get your take or some of your top recommendations within the NBFC basket, because what we are seeing is that though the markets are seen to be consolidating, but a couple of stocks from that basket are doing pretty well, especially from the likes of Bajaj Finance, as we know that the company did come out with their long-term strategy. That's working well. But apart from that, stocks like PEL and Shriram Finance, those are also holding up quite well. So any stock that stands out for you at this point in time?
Yeah, so Nifty Financial is comparatively doing well. Nifty index is slightly lower from its lifetime high, but Bank Nifty and Nifty Financial are quoting at or quoting near to their lifetime high zone. We have seen a decent recovery in the entire sector, and in fact, Nifty Financial is up by around 15% in this calendar year compared to Nifty's gain of 12-13%. In financial services, we have positive stance on Bajaj Finance, and after a long corrective or consolidative move, the stock has taken multiple support near 6500 zone. And we have noticed that from last couple of months, it has been moving in between 6500 to 7800 zone. So it has taken support at the lower band and has been making high rise, high lows on the daily. So some up move could be there. Immediate support for the stock is likely to be in between 6950 to 6900 zone, and stock can see a recovery towards 7350 to 7400 marks. Looking at Shriram Finance, yeah, some positive price pattern are being formed, higher top, higher bottom on the weekly after the negation of lower top, lower bottom. The stock is holding well to its key moving averages, forming a rounding pattern similar to cup and handle in all. So Shriram Finance can do well with the support of 3180. It can head towards 3400 zone. So we like both the name and expecting some positive stance in entire Nifty Financial Services.
Okay, a bit of a positive. Fresh brokerage notes as well that have come out this morning. And the CDMO players in the spotlight, Jefferies has got them on their radar, saying that they have an opportunity to make small molecules in some niche areas, and that facilities in the West as well will help to secure relationships. So that's a sector to watch out for. Cement as well is on Jefferies' radar. They believe that some of the top players within this sector are cutting incentives in the industry. They like Ultratech Cement and they're bullish on JK Cement. Sandip, where does your preference lie?
Cement as a sector, I think, is fairly valued. I don't think that we have a scenario where these stocks are cheaply valued, simply because of the fact that the supply increase in cement is much greater than the increase in demand. And these cement companies have been trying to increase prices for the last 2 years now. So the increased prices market doesn't sustain because the supply is so much more than the demand, then the prices fall. Lower input prices have helped them sustain profitability, but the valuations are very, very high relative to historical valuations in cement. So although demand could pick up much more in 2025 because this year had several disruptions related to elections, prolonged rains, uh, first a heat wave, then prolonged rains, etc. But even after factoring that in, the valuations are not cheap.
Let's get in your take then, Sandeep. I was curious about how you're looking at auto, given the fact that we are seeing consumption patterns, as per reports, seemingly picking up. But then on the flip side, the auto sales numbers weren't all too encouraging for the month gone by. Where do you stand when it comes to auto?
So I think a large part of the negative
Friday the 13th. Blame it on whatever you want, but it seems like we're having a bit of an issue there with the audio. Chandan, maybe I'll get in your take and wanted to talk about some of the stocks within the broader markets and just going by the list of losers actually on the Nifty 500. What's your take on BASF and even the Adani group of stocks, the Adani Enterprises, Adani Green, Adani Energy Solutions? They've all had a pretty rough month.
Yeah, so to start with BASF, the stock has seen a corrective move in last 2 months. And as of now, the structure is lower top, lower bottom. However, the pace of the selling is now getting slower. But multiple supports are visible at 5,500 zone. And if that is broken, which looks that it can do, then it can correct to us 5,200 to 5,000. So further 5 to 8% kind of corrective move could be there in the BASF given the recent price structure. Now talking about Adani group of companies, these stocks are likely to be volatile. To comment on Adani Ports, stock witnessed recovery in the last 2 weeks, but in the week it has remained in a narrow range. Multiple supports are visible at 1200, but at the same time, 1275 to 1300 is the supply zone. Looking at other Adani group name, I think some sort of volatile swing could be there. Adani Enterprises, if you mention, this may be a counter where some follow-up activity could be there. It has been consolidating the range from last 10 trading session in between 2450 to 2535 marks. Today, if opens positive, then I believe some momentum could be there. So with the support of 2450, we can see an uptick towards 2600 zone in Adani Enterprises.
So that stock looks interesting to you at this point of time, Chandan. But Naresh, just coming back to the market setup, it does look like we're likely to, start the day with a decline of 100 points. What do you do after that? Are you expecting a recovery in the second half of the day, or do you expect a further decline? If somebody had to take a position, what would that be?
So, given that the previous range is roughly 24,300 on the downside, you want to be buying closer to 24,400 to 24,350. So, a 100-pointer decline is where the risk reward doesn't become interesting. So, decline of say 200 points, and that's the price point where you want to play for a bounce back. So, closer to 24,350, 24,400 is where I would be looking out for a buy trade. And for now, we are still in a consolidation. So, overall trend is up. Nifty has actually done lesser in terms of a recovery compared to the mid cap and small cap indices. So there is scope for the continued consolidation. So from 24,350, 400, we could go back to 24,800 and then look at it from there.
All right. Just about time for the pre-open rates as well to kick in. So let's find out those interesting mid-cap strategies from our chartists. And Chandan, what's the top mid-cap call?
Yes, looking at the trading ideas, I'll focus on two names. First is the buy on Muthoot Finance. The stock has really done well in last couple of days. A major breakout is visible on the weekly chart. The stock is entering into the new lifetime high territory. So with support of 2080, we are expecting a positive stance towards 22 marks. CDSL is other name. We have positive stance in the entire capital market theme. And CDSL is one of the strongest counter, which has recently given a breakout above 1680 zone, and after that continuously making higher top, higher bottom. So expecting further move to continue towards 2051 can buy with support of 1900 zone.
What are your top mid-cap recommendations this morning?
So that would be a buy on LTI Mindtree. The stock has given a huge cup and handle breakout, sustained well above the 65, 60, 600 mark. The stock looks interesting, and we've clearly seen leadership in the IT pack as such. The stock is still away from the highs of 2021, so there is still upside, which is possible. And out here, the risk reward is also favorable. A stop loss at 65.50, target price of 7100.
LTI Mindtree looks good on the charts, but talking about the power segment, Power Grid will also be in focus on account of the two transmission projects that they've bagged. Chandan, from the entire power space, we have seen the likes of Torrent Power, CSC, even SJV and NHPC and Finances, everything do well. But is there anything that you would want to recommend from the current levels as well as a buy?
Focus on Torrent Power. The stock is recently bottomed out. However, we need to look at surpassing of a key moving averages, but technically speaking, a rounding formation or cup and handle sort of small pattern is visible on the daily chart. So as of now, the multiple hurdles are visible near 1715. There is also the 50-day exponential moving average, but with the support of weekly chart, I believe some recovery could be there. So with support of 1635, we can see a surge in price towards 1715 in Torrent Power. Looking at the CSC, we witnessed a decent up move in the last week, but momentum is now getting dull. It may take support near 185 to start the next leg of rally. So we have to be very selective, and Torrent Power can do some positive stance in this market scenario.
Okay, fair enough. Meantime, Naresh, let's also get a take from you as to what the outlook is when it comes to some of these tire stocks and auto ancillary counters. Some of them in the news today looking at expansion. What is the outlook on battery and tire stocks?
So in terms of tire stocks, we saw a big gap up happen on CAT into new all-time highs and faded off over the next two sessions. But the longer term chart is still okay. So dips back to 2800 to 2900 would be a buying opportunity. Same is the case with Apollo Tires, which is where we've seen a relatively good performance over the years and now has been sideways for some time now. In this consolidation band, 450 has been the lower end, 560, 580 has been the upper end. So out here, a dip back to 500 would be a buying opportunity. So there are buy on dips tire names. In terms of battery names, Exide and Amar Raja have made feeble bounces. So for now, would wait out for a much better base formation before we start.
Let's get back to the market action, because we are in for a bit of a weaker start for the market, seems like, because the pre-open is indicating that. But once it's stock that's going to be yet again in focus could be Nalco. And Chandan, just wanted your take on the same, because just yesterday a couple of the news flow regarding the kind of movement in the alumina prices and the kind of demand concerns from China did actually hammer the stock. It was down around 7%. But any bounce back that is expected for Nalco, or you believe that it's in for some more weakness?
I think let's wait for price to get stability, because it was one of the strongest name, but corrected sharply on the last trading session from 251 to 228 marks, and now near its key moving averages. And if it holds below 230 or 232, then a fresh negative trigger could be there in the counter by going below its rising support trend line. So I'll closely wait and watch. If it holds below 232, then downside may open, which can take it towards 218, 215 kind of level. So expecting some profit booking decline, as the stock is now trading near an important price level on the daily and the weekly chart setup.
All right, do wait for the stock to settle down and wait for the price action on the positive side. But Naresh, if you can quickly help us with your take on Bharti Airtel, because just yesterday the price action was quite interesting, and even today the stock is in for a positive start. So any take on this counter? It's like crossing that 1600 level yet again.
So Bharti is interesting for the fact it's made a good base around that 1520 to 1550 mark, made a recovery to 1650, drifted lower. And yesterday, the stock showed relative strength. Today, also sustaining over 1620 would be a recovery wherein it could go back and slowly and steadily go up. Looks an interesting price point, waiting for a further good close above 1620. Would actually be looking out eventually a move towards new all-time highs here with a stop loss below 1580.
All right, that's the take coming in. Meantime,
if you like this video, then like, share and subscribe to ET Now.